Hello, 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 and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. So welcome, welcome, welcome to the session. It's 50. Here it is, 30th of October, 2016. No trade calls, no recommendations or response for their own stuff. We're here for educational purpose only. And again, everybody's read the disclaimers, disclosures. So what's going on, guys? How's sound? Good stuff. Good to see a lot of familiar faces. Welcome, welcome, welcome. So, what's happening? What's happening? What's happening? As usual, here we're just going to go through the charts. Go through as many charts as we can. Don't want to make these too long because I have to upload them into YouTube. But again, we'll look at anything anybody wants to look on. If the chart is on this MT4. I'll look at it, and again, no questions are off limits. You can ask me anything you want. If I can answer, I'll do my best to answer it, and I'll try and keep some of the maybe non-chart related questions to the end, or sometimes just depending on how they go, just we'll tackle them anywhere. But again, happy to help, hope to be of service. So let's do this now. What's coming up this week? So keep in mind that again, we've got a lot of potential tape bombs on the wire. Again, we've got the OPEC meetings not until November 30th, but we've got everybody that's going to be talking until then. So you've got a lot of wheeling and dealing there. You've got a lot of comments on the wires on Brexit, BOE, Carney, non-Carney. Again, I don't want to get into a whole discussion on that, but it's a bit of a joke the way media is reporting on that. The whole weekend's been on articles about Carney about to quit, and he's not quitting. He's just not going to do the extra years as per the contract. And again, we've got the Trump and Clinton where we could see an awful lot of tape bombs there. I'm not going to get into any political discussions there. I just want to avoid the hate mail from the Hillary or Donald camp. So we'll just look at the charts. Now, in terms of the week is fairly interesting. Monday's fairly light, but as we go into Tuesday, it should start to pick up. A lot of Chinese data, all the PMIs. We got BOJ outlook, BOJ policy rate, and monetary policy statement. So that should be really interesting with a full press conference. And we got GDP out of Canada. We got a bunch of PMIs from the US too. We got GDT, unemployment out of New Zealand. So again, a lot of stuff on that Tuesday, Wednesday. Got building permits out of Australia. We've got inflation expectation out of New Zealand. We got the construction PMIs out of the UK, ADP out of the US, crude oil. We got FOMC statement. Again, no press conference. Most people are not expecting them to do anything crazy. You never know, but most likely no. Thursday, we've got more Australian data. We've got bank rate. So we got Mr. Carney on deck. We got unemployment claims out of the US. We got the PMIs. And then on Friday, we got a RBA policy statement. We got Polo speaking. We got unemployment out of Canada, and again, we got non-farm. So again, the week is really shaping up for an awful lot of moves, a lot of stuff on the wire, so it should be very interesting, okay? So again, guys, don't be shy. First come, first serve. We'll look at any chart, anything anybody wants to look at. Is Rags in the room? Because he's usually not shy, so he's got some charts to look at. If he's not in, I'll still do Aussie and Kiwi because I know he's going to want to look at those. USD, we don't have the USD on USDX on the platform, but you can pretty much look at euro. It's we'll talk about enough USD across the board. Yeah, okay. So EJ, yeah, can you talk about? Sure. We talked about this EJ in the last Sunday video, right? And what we said is it's an interesting interesting area, right? Because the same way that we've been talking about longs on USD JPY for a long time, it's a very similar kind of pattern, right? We've got this huge basing pattern, then we have the wick here, and what we say is we don't like to get long or short into brick walls, right? So this is the key support, and we'd be more than happy to look to get long off this level rather than get short into this level. Does that make sense? So here, the way we were trading, and because the market was starting to trade a little bit risk off, market's trying to trade a little bit heavy, we've seen, the way this has been trading is euro tends to catch a bid, right? So it was an interesting play on yen weakness, which is one of our core assumptions, along with bond weakness and equity weakness. And so a good way, also seeing the way things were shaping up, was to express that view through Euro JPY. So we said there was an interesting area to try to get long, and as long as we could hold above this 111.50s, we'd expect to see this rotate back into the top of this channel, right into the 118, all the way into this breakdown zone. So this, call it 122s into 118s. Oh, that's pretty ugly. Let's make it a little bit prettier. That's the zone that would be attracting, right? So going into the week, we'll have to clear these resistance zones, but it looks like it's going to try and take a stab at that. And again, if this move is strong, these lows are not going to get seen at all. If we test back into these lows, all bets are off, and most likely we'll see a lot more sideways chop, right, or even weakness. So if you're on this move, you don't want it to come back there at all. Does that make sense? Yeah, so again, I think, the dotted lines are not dotted lines, they're just lines, right? It's just support or resistance lines that we put up on the chart, right, based on previous action. So if you'll see us put charts up, lines up today, they're just support or resistance. So again, here the problem is, on your question on would you be getting long here, the way we look at the market, there's not an awful lot of edge here trying to get long, because if our assumption is that as long as this doesn't get taken out, we're going back into those highs, getting long here, what would that imply? That would imply that we could be right on the trade unless we print back down there, correct? So that means that this is your risk and this is your reward. So not what we like. We like to see asymmetric risk reward. We like to get a 1 to 2, 1 to 3 if we're at extremes, or sometimes you could be scalping for a 1 to 1, but not in the middle of the range with this kind of action. So again, a lot of people will be looking at pullbacks as buying opportunities. We tend to like to be early on the moves and just stick with them rather than play in the middle of the range. So we would consider this to be a choppy area and not too interested in engaging here. But there'll be plenty of people looking to get short into here this week. There'll be people trying to get long into here, and there'll be people trying to get long or short in the middle of this range. We don't like to be busy in the middle of the range, but that's pretty much what's going on, right? Yeah, Kiwi's been very nice. We looked at it last Sunday Outlook, I think, too, and basically, again, not to labor the point because we've discussed it in detail, it's trying to play out a fairly pure move, right? So if we assume that we're trying to move up here in some kind of an upward channel, right? What's happened here? Now, we failed at a key zone. Again, you can go back at previous YouTube videos. You can see why we have this level up. It failed at a key zone, which incidentally, resistance, top of the channel, and it pulled back down into an area which had been offered a lot in the past, right? Now, what does that mean? That means that once we come back down here into strong previous resistance, coming back into the mid of the channel, right, into a nice retracement of this move from here to here, if this move has legs, you would assume, let me clear this up, you would assume that bids would support the market here on this retracement back into this previous resistance support zone to continue the extension higher. Does that make sense? At mid-channel for a move back to the top of the channel. Now, the fact that it doesn't hold and it breaks lower, that would lead you to assume that this is heavy, and we're probably going to, as long as we hold below mid, try to test the lower end of the channel, right? Now, what we got was a particularly nice technical move is we break below, and then what happens, once we retrace, we sell off right at the 50 back of confluence of this previous resistance zone, the 50 back of the move from here to here, and mid-channel. So you've got three things. So 50 back, previous resistance zone doing its job again, and mid channel. On top of it, it pins, you get a daily negative close right at that level. So you got kind of 4 points giving you 4 confluence areas. So right now, this is quite a nice move. So if you want to look at it in a very simple way, if you draw the fib from A to B, right, what you would assume now is that as long as this area does not get tested again or doesn't get broken again, what will price do? Even though it may stay choppy, it will try to retest those previous lows. Those previous lows should act as support again, at least short term, for either some kind of a bounce or a breakdown and a move down into the 123 extension, which incidentally comes in at the bottom of the channel. Right? It's all about support and resistance market playing around. So exactly, that would be what we would call a primary target, and extension targets on a very aggressive move for us would be a move back into 68, 67s. Now, it doesn't mean price has to go there in a straight line. It doesn't mean it's going to do that, but that's the way we're looking at it, right? Does that make sense? And again, KJ, just to give you an idea on the dotted lines, does this make sense that this is the most recent strong support on the move down, right? So if you wanted to make sure you remember that level, you just draw a line there, and there you got a dotted line, right? We just use, these are just lines we're putting on at previous support or resistances. So this has been trading very choppy. Going into the week, we'll have to see what happens, but as long as these highs don't get taken out, right, we'd expect choppy action inside this range because the shorts are likely made their bed there, the longs made their bed there. A lot of sideways action unless we break outside of that, much to do about nothing. Daily closes above those highs, we'd expect it to try and rip back into those highs. Daily closes below, we'd expect it to try and puke back into those extension targets. Does that make sense? Right, that's the way we're looking at it. Again, what we're trying to do here in these sessions is I'm trying to keep things as simple as possible, right? Just trying to keep them very basic, very simple, just try and give the easiest way of looking at the market and the outlook for the week, right? That's all we're looking for. What would I do if the market goes back to 50% mid-channel? Well, it depends. Does that assume I'm long? Does that assume I'm short? Does that assume I have no position, right? Here, you know, I think these are these are going to be for intraday players, you know, these are going to be interesting areas to do business because they're going to be bull-bear lines, right? But really, if you're on the swing short, you don't want to see this tested again, right? And if you're long here, you don't want to see this tested again. So again, we're not huge fans of the action here. We'll have to see how the market trades, but I think, as we said, both the longs and the shorts have made their bed. So we'll have to see. Yeah, what you have to say is that those key levels. So put it this way: if you're short here, if it retests the market here, it doesn't mean you can't get short again. But it's probably not going to be such a nice or explosive move as if it puked off your first short. Equally, if you got long here, if it comes back into these lows, it doesn't mean you can't get long again. But in terms of a bigger term move, you know, it's likely not going to be as strong or as pure as if it went skyrocketed off the first entry, right? That's all, right? Yeah, you know, a lot of two-sided action, a lot of whippy, but you know, that's just the way the market is. That's just the way the market is trading here, right? Sure. Yeah, you know, I think the ES is particularly interesting. You know, equities are particularly interesting. One thing to keep in mind is, again, we're going towards the end of the month, and something we've been talking about for a long time, which I'd keep an eye out for. Remember this chart? We've talked about this for a while, right? We talked about the fact that we keep on getting heavier closes on the monthly, right? Lower closes on the monthly. So to us, this is not necessarily a market that seems to be particularly healthy or particularly strong, right? Now, it doesn't mean it can't go higher, but here, what you've seen is after this whole topping pattern here, 2014, 2015, where we sold off and we continued to get aggressive buyers coming in even before in these zones, what happened? The market manages to rip higher and break these highs and hold above, right? Now, if this was a particularly strong market, does it make sense that you would not expect the market here, once it's holding above these all-time highs, if this market were super strong, you would not expect the market to keep on making lower monthly closes. Does that make sense? And now the fact that on top of it, you know, we're looking to close back below this zone is looking heavier, 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 right? So that just leads more confidence to our view that the market is still very toppy and that it would be healthy to see a correction, right? Yeah, you know, and you can look at that in a lot of different ways, but look at it on the weekly, right? So you see what's happened. We've got these, as we said, you know, once we came back down, all this wheeling and dealing, right? And then it just said, no way, Jose, right? Just not going, and we're ripping. And this is where it started to be impulsive, and this is where it started to be aggressive, right? Back. And then what's happening? Bam, we fail. We're not holding above this break zone, right? We're holding below that trend line. And if you're going to take on a daily, what happens? Well, then you see that clearly the market's trying to support, right? Does it make sense that it's holding heavier? So especially as long as the market holds heavy, and if you see any bounce here continuing to get sold, we still feel that the path of least resistance is to take a stab at that 2100 and lower, right? Not because we have a specific bias, it's just we're looking at the charts, right? And again, this has to hold, but it does look like the market is intent on testing these lows. Does that make sense? And, you know, and as we said here on the daily, which we've had for a long time, you know, we've been talking about this on Twitter, 2133 pivotal for Momo and flows. Look at what happened last week. You know, last week, if you look at the 1 hour charts, you see pretty much 4 days out of 5, you know, those overnight ramps just keep on getting sold, right? They keep on smacking down, and then we close below that 2133. So our outlook doesn't change. As long as we keep on closing below that 2133, we expect the market to come and test 2100. Now, I know I've tweeted now or never probably twice this week, but I'll give myself a pass because we're still closing the dailies below the 2133, right? So as long as we keep on closing below the 2133s and we're below there, you might see me tweeting it's now or never to take a stab at those 2100s because it's just holding heavy, right? So we'll have to wait and see. And again, if those 2100s break, then it could get particularly interesting. You know, we'd be focused on a move into that 200. Then we'd expect that to be pivotal for a move back into the 2100s or a move down into the 2050s. But we think this is particularly interesting, right? Clearly the action on equities, right? And, you know, we'll have to see what comes out of the elections, etc. But it's very, very interesting. And that's, frankly speaking, that's the same as if you look at the action on NASDAQ, right? If you look at the NASDAQ, I mean, failure to hold those highs, beautiful little shorting opportunity here on the daily, right? On that negative close. And then what's happening here on the weekly, look at that weekly. Now, somebody wrote me an email asking me about saying that he likes the, you're in the room, I can't see it, you like the analysis, etc., but you have trouble, you're following the Twitter, but you're having trouble understanding where I enter or exit the trades, right? So just to be clear, we're not trying to sell any kind of signal service here or anything. We're just doing updates to try and pay it forward. And what we're trying to do is we're trying to do a Sunday outlook to give people an idea of what they should be aware of, the levels they should be aware of, the levels that are pivotal, and where we think price will trade. right? Now, in terms of entry exits, that depends. It's just impossible. Nobody can, unless they're lying, probably, you can't say, oh, I enter here, I exit here. It depends. Is it an intraday trade? Is it a 4-hour swing trade? Are you trading it on the daily? Are you trading into news release? Are you trading a swing that's that represents 10% of your portfolio? Are you trading something that represents 0.5% of your portfolio? There's so many different things. So if anybody likes any move we're discussing here and wants to say, well, how could you trade a move like that? Or how would I trade, or would somebody else trade? More than happy to look at an example. But, just the general, it's very tricky to say something because, of course, everybody wants an answer, but the answer is probably going to be misleading, right? But I can give you a very good example here. The easiest way to try and trade these, right? If you're looking at the daily here on NASDAQ, so do we agree, NASDAQ, we break above these highs and we're holding extremely bid, right? All the dips keep on getting bought. Right here, what happens is you get a nice little ramp higher. Now, the easiest way with the tightest risk to trade this kind of thing, does it make sense that if this is a false break and this is pure, we simply ain't coming back, right? A lot of people have seen pin bars. A lot of people have seen negative closes at highs or positive closes at lows, right? So here, in terms of entry and stop, the entry is once the daily closes, you're short, right? You're short, you got to stop above those highs. Then the question is, where's your TP? Again, it depends. Are you trading a swing, or are you trading a one-to-one play? Where if you're trading a one-to-one play, you're trading for this breakout zone and you're flat. Somebody might be trading this trade short on the daily close for a move back into the moving average, and that's his risk, that's his reward. He's flat, right? Somebody else may be looking at what we're discussing on the equities and we think it's a big time for a high correction, right? It'd be short here with a stop here and targeting here, okay? Now the question is that your TP? Well, it depends. Are you trading this with one lot? Are you trading this with 3 lots? Are you trading this with 10 lots, right? Because if you're trading it with 1 lot, you might have to trade it very differently than if you were trading it with 3 lots. If you were trading with 3 lots, you might look at first TP into this previous support, second TP into this important support, and try to hold one for the final move. If you had 10 lot trade, well, you might be scaling all the way down, right? Your stop placement is going to be different. The way you're going to manage your stop is going to be different, right? So again, first of all, I hope this helps some people, but I think what's important is to understand that there is no right or wrong in trading. I see so many times, and then I'm going to stop the rant because everybody's going to leave otherwise, but so many people are intent on Twitter, on Facebook, on blogs, whatever, saying this is how you have to trade, and if you don't trade like that, you're a sucker and I'm going to troll you and God knows what. Stay away from those people. You always have to put things into context. Where you enter, where you put your stop, where you take your profit, how you manage your trade means nothing unless you're talking about a very specific example in a clear context with a clear idea of trade size vis-a-vis your account size, etc., 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 right? Stay away from absolutes. There's no truth. What's important is how the market tends to move the majority of the time, what key support or resistance zones are, what key catalysts for moves are, what the market psychology tends to do, how traders tend to react in terms of psychology. But the trade setup, the trade execution, there's so many different shades of gray. Does that make sense? It's a really important point to internalize. A lot of people just don't want to talk about it because, well, anyway, let me stop the rant, but I hope that helps. So, and again, no question is off the, you can ask whatever you want. I just wanted, my point is, hey man, how's it going? My point is just to try and give the best possible answer to really help you and not mislead, right? And again, in terms of election risk, it really depends, right? Right now, the way the way it seems to be trading until now is that the market is pricing in Hillary to win and everything's going to be okay. You know, continuity with Obama, et cetera, et cetera. So what you're seeing is the risk is that every time Trump is up in the polls or there's something negative on Hillary, the market starts to get a little bit nervous and it's selling off. So on paper, I would assume 9 out of 10 people will tell you the risk is if Hillary goes through sideways to up market, if Trump wins, market's going to get a little bit scared and sell off. But again, we just don't know. There's still a lot of things that can happen here to the election, right? Still a lot of things that can happen. Yeah, Aussie. What's going on Aussie? Aussie is being a really tricky one, right? Very, very a lot of wheeling and dealing and particularly tricky to trade. I think this is a good example of people who are stubborn are just not getting paid, right? So here you can make a fairly good case for this moving higher or trying to be aggressive on a counter trend trades and trying to play for a break. The bottom line is, I think here is that bulls made money, bears made money, and pigs are just getting slaughtered, right? So what that means is that all these areas, and if you want, you know, we can look at a shorter time frame, but there have been multiple opportunities to get short into these highs to play for a move back down into that 100, right? Equally, on all the moves back down into the 100, there have been ample opportunities to try and get long for a rip back into these highs, right? The only difference has been, even here from these longs, the only difference here is that the longs that traded and flattened up or held partials and reloaded on the longs are making money and are still long, right? The shorts who took partials and reloaded are still short and they made money. But the guys who did not take any profit because they just wanted the rip or they wanted to dump, they're either stuck in a lot of chop, not having fun, not making any money, best case, or worst case, they've added every time, so they find themselves not having made money and probably with a position that's 2, 3, 4, 5 size the initial position they had at the beginning of August simply because they're getting stubborn. Does that make sense? So that's pretty much so here I think you can make a case for either side. I'd be more partial to be looking to trade this to the short side. But again, any shorts for me on this is you have to be looking to take, you know, anything from 70 to 80% off into those 100s tests and then just reload or hold partials for the move lower. But you can't, you know, whether you're long or short, you really can't be holding full here. It's just too choppy. You know, and chances are we'll continue to mess around at this zone until we finally decide to break. But the problem is also it's not so clear because what happens if we break to the downside, you've got the 200 DMA that's going to be coming up, right? If you break hard to the upside, you've got this previous resistance that's going to come into play. So it's still going to be stuck into a broader range with strong resistance and strong support. So for me, it's probably the least interesting pair here in terms of that. It has been tradable, but I think it's been a lot more of a tactical trade than trying to get into a swing. If you're trying to get into a swing in terms of a dollar swing and you're trying to trade a commodity currencies, I think Kiwis being the most interesting. Then if you like the chop, if you like the explosive nature of the headline risk CAD, and the least interesting one, Aussie. Aussie's probably been the most interesting one for tactical trades inside a range, right? And yeah, exactly. Or if you're, you know, or that USD JPY, but that's not a commodity currencies, but sure, exactly. Does that help? Yeah, I mean here, yen we're looking for yen to continue to trade. Minimum, we're looking for 107.50s, an extension 110.50s. So that's the way we're looking at the trade here. Now you see it's starting to coil. We discussed it earlier. It's the same kind of trade as EJ. It just took off earlier, right? We just don't understand why anybody would want to get short into that brick wall. So for us, and we've been talking this in the YouTube videos and on Twitter for months, right? Since the beginning of the summer, our preferred view was structurally to look for bond weakness, equity weakness, and yen weakness and dollar strength. So pretty much, except for the equity, everything's been playing out quite nicely. But you know, so we're long yen. Here we'll have to see how this trades because you don't know how aggressive the risk off tone is going to be. We might get some wheeling and dealing, so that's something to keep an eye out for, right? But right here we'd be looking for this to try and continue to correct higher, right? Clearly, I think there's less edge in trying to get long here. I suspect most people are going to be trying to buy dips into the 103.50 for this to continue to press higher. You've also got the support of all these previous lows here. You've got the 100 that's going to be coming down here and supporting. We're not huge fans here, but clearly the first, you know, 105.50 is going to be the bull bear line for the week. As long as we hold below, 103.50s can come into play. And if we hold above, we'd expect those 107.50s to come into play early. Does that make sense? Oh, we got Mark Carney asking a question on cable. That's pretty exciting. So, so the question is the wick on, is the brick wall on yen the same as on cable, right? And in brackets, fat finger. So again, viewers of the YouTube video and you know people who follow me know that since this played out, this happens. You know, we call complete BS on the fat finger, right? Algo finger, fat finger, whatever. That's all BS as far as we're concerned, right? Was it an aggressive move lower on low liquidity? Yes, 100%. Was it a fat finger? No way, no way, no way. What you'll tend to see is if you've been around and you've seen fat finger mistakes, right? Fat finger equals mistake. What you see is the market will trade back into the mistake level fairly quickly, right? It will erase it because it's just a drive-by shooting that doesn't hit anybody. Mistake, everybody runs into the house. No harm. Everybody goes back out to play, right? What happened on the cable was very different. We got the puke, right? And the next day, still more selling. The next day, still more selling. This is not a fat finger, right? But it's the same thing, right? When you try to get you know, you've got the luxury to express your views on any number of chart, any number of pairs, right? So the question is, when you see something we saw a while ago on Kiwi, or you've seen in yen, or you've seen in cable here, when you've got such an aggressive range that is being put in on a specific day, as far as we're concerned, unless it's a tactical play, short term, we don't see an awful lot of edge trying to trade inside that range. Most likely you've got poor liquidity, slippage risk, etc., etc. So if anything, right, if there was a normal kind of scenario, we'd be more partial to look for longs at the low end of this range, right? But right here, the way this is trading, there's just too much uncertainty, right? There's too much headline risk. So the quick answer is this the same as yen? Pretty much. But here, there's just way too much uncertainty with the Brexit, any comments that could come in on the wire. But clearly, it's a brick wall trying to short into that, right? So we wouldn't necessarily want to get long either, but we just don't think there's an awful lot of edge playing inside in the middle of these big range days, right? Okay. Any comments, any questions, any pair anybody wants to look at? AUDNZD. Yeah, you know, do you have a specific question on that? No, I don't trade this. I don't think, yeah, I just don't, yeah, I prefer to trade the majors or more liquid stuff. I don't think there's an awful lot of edge here. If you're looking at this on the weekly, you know, I remember, as far as I can remember, the past, what, 2, 3 years is being full with people trying to play parity or break of parity here. And it looks like it's just hovering here. I have no interest whatsoever in playing this either long or short. I think it's particularly hard call unless you were looking, you know, we had some decent long opportunities here, but again, not something I traded. So I don't know if you have a specific question or you're looking at something specifically here on this chart, but you know, it looks like pressure is still on, right? On this weekly. If you look on the daily, it looks like there's an awful lot of chop inside this these moving averages, right? 200, 150, all inside this range. So I think that there'll be offers trying to cap it here, bids trying to support, but really I think there's not an awful lot of edge, and I think there's far more interesting opportunities out there than try to trade AUDNZD, even though I am sure a lot of people would disagree with me, right? You're just in the middle of a big range. There's just no edge, right? Just no edge. You know, yeah. Look at it here. We let go. There's nothing much all the way back into these lows. We rip higher. There's nothing much into these highs. You know, it's just not an awful lot of edge. And again, if you're trying to trade tactical intraday, there's so many more liquid pairs out there you could choose from, right? I think you do yourself a favor, and you know, there's a lot of other things you can trade. Yeah, you know, on will your resignation support? Well, if you'd read your own contract, Mr. Carney, you'd know it's not a resignation if you don't decide to stay on after 2018, right? So I would read your contract again, right? So if Carney did tomorrow come out and say, resign, I'm going home tomorrow, I'm going home on Tuesday or Thursday, then it would be a lot of panic. But, you know, the discussion now is whether he's going to stay on after 5 years for the extra 3 years. So that's still until 2018. So I would sincerely stay away from all the jokers talking crap on Twitter and on the internet, because it's a lot of clickbait, right? Yeah, sure. I mean, Euro, what's happening on Euro? I mean, on Euro, it's fairly interesting in terms of sentiment, but not so much in terms of chart, right? So what we said, if anything, we were discussing this the other day, and we said it's the same thing as you're coming back down and you've got these strong support zones, right? Market bid this up aggressively here. Once we were selling off, once we broke this 1050, we said, really, there's no edge for us trying to catch this unless we get down into the shaded area. In the shaded area, we can try and play, right? But the risk will definitely be outside the shaded area, right? So right here, when we move back down, you know, you did have a nice chance here, daily close at lows, you know, long, stop below those lows, trying to trade it back for a move up. If you can scale out, you've got about 1 to 3 risk back into the pivotal 110, back into the moving averages on the daily. You've got a 1 to 4 risk reward. That's a fairly nice trade, even if it's a counter trend trade for a move back into the descending trend line, and ultimately we're going to puke, right? Very nice counter trend trade. So here, where are we? We're still stuck, right? We think that this 112 is still kind of neutral pivotal zone for the year. And right now, most likely, the sellers are going to try and hold it below the 110. The way we're looking at it is 110 pivotal level for the week, right? If we hold below 110, we'd expect it to try and come back into the shaded area, right? If we break above, we'd expect it to try and come back into the 112, into those two moving averages. Now, keep in mind the way this has been trading with equities. So if equities really give it up, you'd expect this to continue to have a bid. Don't try and sell this just because equities are puking. That's not the way it's trading, okay? But broadly speaking, still stuck in a broader range, right? And not an awful lot to do here for me right here, right now. Not expensive enough to sell, not cheap enough to buy, right? So yeah, it's still kind of stuck here. It's inside that Brexit range. This was a nice buy if you're being contrarian into the shaded area, but now not a lot of interest. I'd watch the 1050. That's really the level to watch for the week. Clearly, yeah, that's the level. Yeah, I mean, in terms of crude's just such a tricky one because you've got so much headline risk, right? Here, technically, the break and the daily close here would make us look at the market to try and retest the 47s. Now, the problem here is, as always, you could get, there's so many purer plays out there, and you can get any kind of comments on the wires, and this will start ripping higher. Now, I don't think we'll get any major producer really coming out with comments until we start to trade below the 47s. So right here, that break for us, as we said, pivotal, we'd expect it to come back into the 47s. And so that will likely be the pivotal level we're focusing on in a week. I think if we bounce there, it'll try to bounce, try and take it. If not, it'll try to sell off. But our outlook is that, as we've discussed in the past, this is pretty much going to stay stuck inside a broader range, right? It gets heavy into the low 40s, into the 30s. Somebody's going to come out and say something on the wires, and this is going to pop, right? This pops much above the 51s, 52s, 53s. Shell producers will be out. Everybody will be pumping like there's no tomorrow, and it'll come back down, right? So unless there's a huge catalyst, we think it's going to be fairly range bound and largely driven by comments on the wires and meetings, no meetings, et cetera, et cetera. So I don't think there's an awful lot of edge unless we're at extremes. We get no deal at the meeting, might be an awesome short, again, but it's a tactical play. Even though it's trying to play out technically, I don't think there's a lot of edge trying to be technical here because it's more of a tactical trade. And again, there's a lot of headline risk, and please don't follow the jokers. If you're a new trader with a smaller account, please do yourself a favor. Don't trade crude futures. Don't trade gold futures. They're big contracts. They move. You're going to get taken to the woodshed. If you have to trade the ETF, don't, learn to walk before you jog and before you run, right? Do yourself a favor. I know a lot of people are not going to say that, but again, Deutsche Bank's just not an issue here, right? Nobody cares. This is something we discussed a lot, in the weeklies and stuff. You have to be aware of what's driving the market, and there's certain times when the market is going to be focusing on something specific, right? When it does, you want to keep an eye on that. You want to keep a quarter of an eye that. You want to keep a fraction of your eye on that. But when it's not in the focus, there's no point, right? So look at Deutsche Bank. How many times do you guys see me talk about a bank stock? Pretty much never, right? In the past 5-6 years, whatever, right? So when did we start to talk about Deutsche Bank? Well, we started to talk about Deutsche Bank when it started to puking, and we said, we get below the support zone, right? We get into single digits. You got to pay attention. That's why you got to keep the chart open. That's big pivotal level. Now we've bounced. This is not an issue. This can puke a couple of euros, whatever. Unless this is in single digits, nobody cares, right? Is it going to get sold? Here's it going to pop? Nobody cares. It's not the focus anymore. The only reason this is going to be the focus for anybody is if this trades single digits. That's the only thing you need to know about Deutsche Bank, right? Karen, we'll talk about that tomorrow, okay? Save it. Because it's going to be too long otherwise. Make a note. Okay? Yeah, here, gold. We've been talking about gold for a long time. This has been another nice example. And again, we said, the 1250 is a really important level, but it's a tricky one, right? Because so this is an example where the analysis is a lot easier than the actual trading, right? Or at least the way we look at it, right? So market's coming back down, and we know this 112, we're looking at the range 1350, 1300, 1250, high, mid, low, right? On top of it, you've got the 200 DMA coming in, supporting just ahead of the low range. So we know this is likely going to be a really interesting support, and we call this big pivotal level, right? Now, what does this mean in terms of trading? Well, trading, it's really tricky, right? Because what are you going to do if you want to get long? You're going to get long just ahead of the 200. Well, you know, especially when it's closing heavy, stops like to take those, take that moving average out, right? Clip it before reversing. Just behind it, you've got a round number. You know, every piker, his hamster, his goldfish, his pet iguana are going to have a tight stop. So there's a very good chance the market is going to try and clip those too, right? So what do? You wait for break below and a day close back above the 1250. Classic, right? But what happens, right? You've got this, that all of a sudden, even if it can clip below, you've got that 200 that's now resistance. Not that easy, right? And even if it did get a daily close back above the 200, it's still a tricky one. It'd be a much nicer setup, but it's still a tricky one. So this is a classical one where you know there's a fairly good chance that market is going to find support here, but to trade it tight with a tight risk reward, with a defined risk reward, is really, really hard. Now somebody's going to say, hey, 50, no way, it's super easy. You just wait for that daily close, you get long, tight stop below those lows, and you're in heaven. What's so hard about that? Well, that just happened to work this time, right? The fact that it still closed below the 200 was a little bit heavy. It's a really tricky. So this is one of those kind of trades we talk about where the level or the support or the dotted line or the pivotal level, whatever you want to call it, we look at those from a day close perspective, right? So you've probably heard us talk about that a lot more even on crude, etc. The levels that are key from a day close perspective. So what that means is as long as price closes above or below, that's what we're looking for. So it means that from a stop placement, it's really tricky because that level can be pierced in either direction, whether you're looking for a long or a short by you don't know how much. So if you're trading it with a stop date, you have undefined risk if you get long or short. You see what I mean? That's another example of something that's very difficult, right? A lot of different ways to trade it. The most, I would say, the simplest way is a way where you don't have a real defined risk unless you have an arbitrary defined risk. So, you know, it's not. I was talking with another student today. It's really important to make the difference between analysis, a research note, a book, a blog post, an outlook, or your actual trades, right? You use the analysis or the levels to identify key support or resistance. Then how you express that or whether you express that through an actual trade depends on a lot of different things, right? And different people are going to express that in different ways with different strategies. Don't feel there's only one way to look at things, right? Okay. Yeah, here you can make it's a tricky one, right? I think on gold you can make a case for this is coming ripping back up, or you can make a case for this being very, very bearish, right? What I've learned over time is unless you get to real key inflection points, I don't try to kind of be too smart about it. So the way I'm looking at it here, the only thing I think is fairly clear is that 1350, 1300, 1250 low end of the range. It's coming back down after an aggressive move and it's bouncing exactly where you'd expect it to bounce. A healthy move would be a pop back into the 1300. Okay? If it pops higher, there's so much overhead resistance that this could still be setting itself up for a mega puke, or this could be the hold where what happens, all of a sudden this climbs up and the moving averages get back in trend and everybody's going to say this was the easiest the easiest buy in the world, right? Because what's going to happen, the 50 is going to come, the 100 and the 200 is going to come up. You see what I mean? So right here, I think you can make a fairly valid case for this being a strong buy and that we're going back higher. We're going to bounce back down into these moving averages of support and we're going to heaven, right? Or you could actually make a pretty good case that this is the first move down and we're topping, we're coming back down and we need to correct lower. Now, as far as I know, nobody has a crystal ball, right? So I'm just going to trade the levels. I'm going to trade the areas. I'm not particularly looking to get into a big swing because I don't think it's particularly clear here. But I think what is clear, at least in the way we're looking at the markets here, is that as long as this held, there's a good chance that the healthy move would be a move back into the 1300, possibly into this whole area. And if you're looking for opportunities to get long here, there's a decent asymmetric risk reward profile to the trade to get long. Once you get here, then it's probably going to be to the short side or flat. You know, it depends. But, you know, there's a lot of different ways this could move. You know, it could even, you know, it could just come back up, come back down. You know, there's a lot of things that can happen. And especially when you're going into these Fed meetings where we're going to see if we're going to raise rates or not, if they're finally going to raise rates or not, as we're going into the November election, et cetera, I don't think it's the time to try and make bold calls or be very aggressive with trades because there's just too much that could happen and whip you out of it. So I think it's really important to try and be tactical, try to lock in some gains and understand that there's a time to be aggressive and there's a time to be a little bit more defensive. Does that make sense? That's the way I'm looking at it, at least here. And it's a very, you know, very similar discussion on silver, right? Silver is holding in a particularly nice support here, but you could still make a bearish case for it, right? You could still make a bearish case for it. Okay. Okay, let's look at CAD, and then I think we're going to call it a day because if not, this is going to be way too long. It's going to take ages to upload to YouTube. CAD, what's going on CAD? Again, our outlook hasn't changed on CAD. We've been looking for 135s to come into play. You got a little present here on Polos the other day, right? Whether you just flip longed on the while he was talking, or you got long on that daily close with stops below those lows. You know, once you get a news day like that, it's so aggressive. It's very good chance it's not coming back. You need to stay wide in terms of your stop, but there's a very high percentage the move's going to extend because a lot of people get caught off guard. So right here, as long as we hold above this breakup zone, you know, we'd expect those 135s to come into play. Clearly, we would not be chasing the longs here. We'll have to see if anything happens on crude. Clearly, any pullback here is probably going to be a buying opportunity for a reverse higher. And, you know, there's an awful lot of previous resistance that's going to be acting as support here, right? But I think this is clearly not cheap enough to buy nor expensive enough to sell as far as we're concerned now. Okay? So, guys, I hope that was helpful. Thank you all for stopping by. Thank you so much, all the guys who've been liking the stuff on YouTube and retweeting it and sharing it. You know, as always, it's good, and the more people, the better. We try and get a safe message out, a more responsible message out, and try and weed out and not talk about all those fortune seekers, all those dream sellers. Try to have a bit more of a realistic approach of the market. It's always good. Guys, I'll try and post it on YouTube as soon as it'll load. Have an awesome one. Thank you so much for flying with 50. And again, you can always hit me up on Twitter during the week. If there's a chart you want me to post, I'll try and post as many as I can from the webinar. Okay? Have an awesome one. Thank you so much, guys. Bye-bye.